As a dividend growth investor that's now been buying different dividend paying stocks and ETFs for going on 7 years now, there's of course lots that I've learned over the years. And with that, I've definitely gotten better at picking out super high quality dividend paying ETFs that match exactly what I'm looking for. Now, what exactly am I looking for, you might be asking? I look for different dividend paying ETFs that not only pay a decent starting dividend off top, but on top of that also have the potential to grow in price over time, and as a bonus pay more and more in dividends long term. Now in this video, we're going to go over some of my favorite dividend paying ETFs that either offer massive growth potential in the future and or dividend income from day one along with dividend growth at that. Now this is sort of going to be a collection of my favorite dividend paying ETFs that I've found over the years. And honestly, quite frankly, I wish I would have found and invested into a lot sooner. So if you want to see all of my favorite dividend paying ETFs in one simple video, make sure to drop a like down below, stick around, and let's get right into the first one. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now this ETF came across my radar a while ago, and although this ETF doesn't have as high of a starting dividend yield of that compared to something like SCHD or Devo, this ETF has a lot of massive growth characteristics because of the holding breakdown, which we're going to go over here in a second. And like I sort of mentioned earlier on in the intro, if you are a dividend growth investor that wants to earn cash flow consistently, but doesn't necessarily care about earning a ton in dividends from day one, and maybe you favor total return or just overall net worth long term, VIG is definitely going to be a great option. Now right here on the Vanguard website, which is the provider of VIG, it says product summary seeks to track the performance of the S&P US Dividend Grower Index, passively managed full replication approach, remains fully invested, etc., etc. Now, instantly, I love the fact that VIG has a very cheap expense ratio of just 0.06%. I am a huge fan of DGRW, and DGRW honestly is probably up there right next to VIG, in my humble opinion, as one of the best, highest quality dividend growth ETFs across the entire market. But VIG does have a much cheaper expense ratio of that, and that's because DGRW has a 0.28% expense ratio, where VIG is dirt cheap at 0.06%, which is pretty much what you're going to find a lot of times when it comes to Vanguard ETFs. Now, I mentioned a little bit earlier ago that even though VIG does have a basket of stocks that do pay dividends and also has some significant dividend growth, VIG has performed very well and outperformed a lot of the other dividend growth ETFs as far as total return goes, because this ETF has grown so much over the past 18 or so years. And just for some perspective on that, around 2010, VIG was trading around the $50 range, where as of right now, it's at $174. And keep in mind, this is not by any means a growth ETF. This ETF pays a decent amount of dividends also. So pretty much over any time frame that you look at VIG, you're going to see that it's pretty much green on every single time frame, because this ETF is traded up and to the right pretty consistently, and just as of recently trading at all-time highs. Now, the reason VIG has performed so well and has grown so fast is of course due to the holding breakdown, and specifically even the top 10 holdings, which make up around 31% of the overall ETF. But this ETF has a lot of exposure to technology, but not too much exposure, so 23% gives a dividend growth investor a lot of exposure to have some growth upside potential, but again, not too much technology exposure, meaning that the ETF is still going to be relatively low beta compared to some of the other growth ETFs out there. The top 5 in the breakdown are technology, financial, healthcare, industrials. Then VIG has a smaller portion of consumer cyclical, basic material, energy, utilities, and communication. Now, depending on what type of investor you are and what you sort of are trying to solve for, if you are investing into ETFs, I think it's very important to look through the holding breakdown and see exactly what type of exposure you're getting from different sectors. And of course, maybe even more importantly, see what the top 10 holdings are when it comes to the ETF. So for VIG, for example, we have 5.3% Microsoft and 4.4% Apple. So this ETF is about 10% overall, just made up of Apple and Microsoft if you add the two together, which I definitely like because I'm bullish on both these stocks. I do own both these stocks even individually through my portfolios. The rest of the top 10 holdings is also very solid in my opinion. We have JP Morgan, we have United Health Group, we got Broadcom, ExxonMobil, Visa, Johnson & Johnson, MasterCard, Home Depot, and others. VIG is also super diversified, 318 holdings, which I also like, being sort of a risk-averse investor. Now next, looking into VIG's dividend growth, dividend history, etc. The trailing 12-month dividend yield is around 1.4%. Now side note, VIG was offering a much larger dividend, of course, sometime last year when this ETF was down substantially in price along with the rest of the markets. But as of right now, which trading at all-time highs, you're not going to get the most cash flow from day one because again, this ETF is relatively expensive, although historically it just seems to keep going up. But the great thing about VIG is that even if you are going to get a dividend starting at, let's say, 1.4, 1.5% right now, the dividend growth is definitely there, which means this ETF has consistently paid investors more and more, historically at least, and most likely will continue to do so unless something drastically changes. For some perspective, back in 2014, around 10 years ago, this ETF was paying around 40 cents, 33 cents per share per quarter, and as of the last few quarters, we're talking 77, 87, and even 92 cents per share, which is about 3 times as much in dividends that was paid to investors around 10 years ago. And it's also important to note that just as of recently, VIG paid the biggest dividend of all time at 92 cents per share. The 12-month prior dividend was 87 cents, indicating substantial dividend growth, which investors of VIG absolutely love. Is ticker symbol DIVO, or the Amplify CWP Enhanced Dividend Income ETF, which I currently own around 1,476 shares of as of filming this video. Now, DIVO came across my radar several years ago, and this ETF pretty much offers everything I'm looking for. DIVO has the potential to keep growing long-term in my opinion, as it's done so in the past as far as price return. But also DIVO has a pretty concentrated small basket of holdings, around 42 as of right now to be exact, but also utilizes a cover call overlay to generate more dividend income for investors from different names that might not always generate the most dividend income off the bat. Now I said that DIVO pretty much offers everything that I'm looking for as a dividend growth investor because like I said, DIVO definitely has the potential to keep growing over time, but also on top of that, if you buy into DIVO, you're getting a starting yield of around 4.5, 4.6%, which is not bad whatsoever, especially like I talked about, having the exposure to the holdings within DIVO. Now DIVO has paid monthly dividends consistently, and for every single share of DIVO that I currently have in my portfolio, I'm pretty much more or less guaranteed to get my 14 or 15 cents monthly payout per share, which I've received for several years now. So if you're a dividend investor that wants some growth potential, but also wants consistent income, which in my opinion is sort of the best of both worlds, check out DIVO if you haven't already. The next dividend paying ETF that I would consider a buy and hold forever position in my long-term portfolio are my 1,248 shares of JEPI, the JP Morgan Equity Premium Income ETF, which I've held for several years now and was starting to feel like forever. Now JEPI is sort of one of the OG cover call style ETF funds. And what I like about JEPI is the fact that JEPI has the potential to grow slow and steady over time, but all along while JEPI, because of the cover call option income strategy overlay, JEPI has the potential to pay a ton of dividends along the way. Now JEPI gives you exposure to some of the best companies in the world, of course, although you're probably not going to get exposed to a ton of upside when it comes to JEPI because of course the cover call overlay. But JEPI's dividends over the year have been pretty significant. There's times where JEPI pays around 8% trailing 12 month, and times where JEPI's paid over 12% trailing 12 month. As of right now, we're closer to 8. But even still, over the years, JEPI's been a staple in my portfolio, not necessarily my favorite stock or ETF, but a consistent asset that's paid me monthly every single month, and that I'm going to hold on to most likely forever. The next buy and hold forever ETF in my portfolio would have to be JEPI's brother, or JEPI's sister of course, my 508 shares of the JP Morgan Nasdaq Equity Premium Income ETF, JEPQ. Now what I've grown to really like about JEPQ over the years is probably exactly what all of you guys also have grown to love about JEPQ, especially if you hold on to this one. The fact that JEPQ gives you exposure that's similar to that strategy of JEPI or any other cover call style ETF, but because of JEPQ's holdings, because JEPQ has so much exposure to technology, this option income style ETF, even with the cover call overlay, has grown significantly. For example, up almost 19% over the last year, all while paying dividends monthly to investors like myself, which are somewhere around the 8 to 10% yield on a trailing 12 months. Now I get it, there's some growth style ETFs out there that have much more growth potential than that of JEPQ. And there's also some ETFs out there that pay much more income than JEPQ. But what I like about JEPQ is that you really get a taste on the higher end of things on both sides. You're getting more or less close to a 10% yield trailing 12 months, but you're also getting exposure to some growth potential. All in all, as far as a income focused, but also slightly a growth focused ETF as of now, JEPQ is one of my favorites and an ETF that I'm going to be holding on to most likely forever. My next buy and hold forever position, one of my favorites, if not my favorite ETF across the entire market as of right now, is my 604 shares of the SEHD ETF, or the Schwab US Dividend Equity ETF. Now SEHD is one of the most popular dividend growth style ETFs across the entire market, especially across the dividend investing community, and for good reason in my opinion. The ETF is super cheap to hold on to with a very cheap 0.06% expense ratio. The ETF has grown more and more over the years. The holding breakdown is well diversified and the strategy is very bulletproof. But on top of that, SCHD offers a decent starting yield at around 3.6% as of right now. But on top of that, my absolute favorite part of SCHD is the fact that this ETF, at least over time, you already know what I'm going to say, has paid more and more in dividends consistently year after year after year. Now, my plan with SCHD as of right now, as you can see, I have over 600 shares of the ETF. And if I keep buying shares consistently over the next year, hopefully I'll end up with close to 1,000 shares that, let's say, are going to pay me 60 cents quarterly, hopefully next year 65 cents quarterly, hopefully after that, and hopefully years and years from now, I'm going to be getting paid $1, $2, $3 quarterly per share that I own. Now, out of all the ETFs that we're going to go through in this video, this is probably the easiest buy and hold forever position in my portfolio. Every single share of SCHD that I purchase feels like a share that I'm locking away with the key and throwing away the key. Now, even though this ETF isn't necessarily the best dividend growth ETF across the entire market for several reasons, I seem to think that it's definitely up there with the crew and going to be a position that I'm going to be growing out extensively over the next, say, 7 or so months. Now, DGRW, in my opinion, offers very similar aspects of that of SCHD and other dividend growth ETFs. Only this ETF sort of does everything a little bit better. Besides the fact that this ETF has a pretty expensive expense ratio, compared to other ETFs sort of within this sort of category, DGRW has grown significantly over the past, say, 11 or so years, up almost 200%. But my favorite part about DGRW specifically is the holding breakdown. DGRW has a perfect mix of different stocks that have the potential to grow over time, which of course is going to have the ETF price move up and also have your net worth move up. But also within these holdings, there's different names in here that of course all pay dividends, but also pay more and more in dividends over time. So just like SCHD, you're not necessarily investing into DGRW for instant gratification. You're buying shares of DGRW today to really benefit off of it later on in the future. On top of that, this ETF does pay a dividend monthly. So for monthly focused, dividend income focused investors that want to use dividends for cash flow in the future, like myself, this is also going to be a positive. As far as dividend growth goes for DGRW, not the fastest dividend growth across the entire market, although as you can see over the last 10 years, the dividends have been getting bigger consistently. All in all, my plan with DGRW is to grow this as my next large dividend growth single position, and this is after this year once I fulfill my 1,000 shares of SCHD, which is the goal this year. Ticker symbol VGT, or the Vanguard Information Technology ETF, has been one of the fastest growing ETFs in the entire market over multiple timeframes. Now, even though this ETF gets criticized for being a little bit underdiversified, owning a majority of Apple and Microsoft, in my opinion, for a long-term investor that wants exposures to some of the fastest growing companies in the world, this ETF offers exactly that. Now, in this video, we're going to break down VGT, explain exactly what it is, how it works, and if or if not, I think VGT is offering a buying opportunity as of right now. Now, if you consider yourself a growth investor that wants to learn about one of the fastest growing ETFs across the entire market, make sure to stick around, drop a like down below, and let's get right into it. I just finished my brand new dividend investing ebook where I share exactly how I went from zero to now over 7 figures invested, and also on how I earned more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So right here on the Vanguard website, it says VGT, and one of the first things that instantly sticks out to me is the 0.10% expense ratio. Now, although this expense ratio is a little bit higher than something of that like VU or SCHD, of course, at 0.06, 0.10% is definitely worth what it offers when you see this ETF's performance. Now, the product summary for VGT, it says, seeks to track the performance of a benchmark index that measures the investment return of stocks in the information technology sector. It also says passively manage using a full replication strategy when possible and a sampling strategy if regulatory constraints dictate. It lastly says includes stocks of companies that serve electronics and computer industries or that manufacture products based on the latest applied science. Now, VGT has been around since 2004 and has almost 70 billion in assets under management. So now that we went over what VGT is, how it works, looking into this ETF's performance, the ETF is up around 950% as far as price return goes. And once again, that's since 2004. Now, later on in the video, I'm going to show you exactly how much an investor would have been left with if they would have invested a relatively small amount of money back then. And stay tuned because you're going to be shocked. But even on the last year time frame, we're talking almost 44% return, which is obviously beating the overall market. And that's of course because some of the top holdings like Microsoft just recently hit a brand new all-time high, which VGT holds around 20% of Microsoft in the ETF. Now, if you look at the breakdown for holdings, this ETF is technology, which means it's going to have a high beta, which of course in turn means that in this sector, when the market rips, this ETF is going to move. But of course, when the opposite happens, hold on tight. Now, this ETF, like I said towards the intro, does get criticized sometimes for having sort of a less than diversified basket of holdings. Although, of course, if we're looking at the performance of this ETF, I don't think anyone's really complaining. But even though there's around 300 different holdings within VGT, investors are getting a small piece out of a lot of different companies. Of this overall ETF is simply made up of Apple and Microsoft. The top 10 holdings altogether being things like Apple, Microsoft, Nvidia, Broadcom, Adobe, Salesforce, Advanced Micro Devices, we have Accenture, Intel, Cisco, and others. Now, the reality is that the fact that this ETF does hold so much Apple and Microsoft, when Apple and Microsoft do really well, which of course they have been as of recently, Apple and Microsoft are both basically trading at all-time highs currently. During times where, say, Apple and Microsoft might dip substantially, this ETF is definitely going to feel that in the price. So the high yield ETF and the ETF that I think could be a great option for an investor that wanted to live free and clear off of dividends completely, especially for an investor that doesn't have millions and millions of dollars to start out with. The ETF that I'm talking about is SVOL, or the Simplified Volatility Premium ETF. Now right here on the Simplify ETF website, it explains a little bit about how SVOL works, and it's a little bit complicated, so listen closely. It says the Simplified Volatility Premium ETF, or SVOL, seeks to provide the investment results before fees and expenses that correspond to approximately 1/5 to 3/10 the inverse of the performance of the CBOE Volatility Index, or the VIX Short-Term Futures Index, while also seeking to mitigate extreme volatility. Now, to dig even deeper into this ETF, it says strategy design, passive inverse VIX exposure. 25% inverse VIX exposure attempts to balance the trade-off between maximized income and minimizing drag from high volatility. Another positive about this ETF, income generation without a Schedule K1, so come tax time, that's going to be helpful. Now, the portfolio application says income generation, a different approach in seeking income than traditional higher yielding assets. Strategy provides an enhanced opportunity for portfolio performance when equity markets are range bound. Now, looking a little bit deeper into SVOL, some of the performance and some of the reasons being why I personally invested into SVOL several months ago and continue to buy more shares. First of all, as far as performance goes over the last year, even though SVOL is extremely high yield, which I'm going to share with you in a second here, this ETF is actually up 4.82%. Now, on the max time frame, zooming all the way out, SVOL is in the red, unfortunately. And this is since about May 2021. So unfortunately, SVOL does sort of have a bad look, at least on the all the way zoomed out time frame. Although since around December of 2022, the ETF has performed much, much better. And also, side note, trust me, with the dividends that were paid throughout this entire time frame, you are not going to be super disappointed about a 12% loss as far as ETF price. Now, some more interesting and important facts about SVOL, the expense ratio is 1.16%. Now, hear me out before you say to yourself, that's way too expensive, I'm not buying any SVOL. After I just shared with you exactly how this ETF works, you can probably understand why it's sort of management heavy, so you are going to have to pay a pretty penny for that, which is definitely one of the negatives. Now, on top of that, SVOL has almost 800 million of AUM, so the ETF has been growing pretty nicely over time. Now, SVOL has been trading in this range for quite some time now, and honestly, as a shareholder of SVOL, I don't mind whatsoever even if this ETF does trade more or less sideways, as long as it's not decaying like crazy, like many of the other higher yielding ETFs and stocks out there. But now let's get to the good part, talking about dividends when it comes to this ETF, because after all, the whole point of this video is to show you an ETF that could be one of the best and easiest ways to reach financial freedom or to buy into something that's going to pay your bills and then some. And with SVOL yielding over 16% on the trailing 12-month dividend yield, 16% with very consistent dividends, anywhere from around 30 cents on a monthly basis, upwards of 32 cents or even more on a monthly basis. But over the last year or so, we can see that SVOL, for the most part, has obviously had some sort of cadence where the management is obviously trying to give investors around 29 to 30, 32 cents on a monthly basis, which equates to somewhere of around 16% per year in dividends. So now that I share with you that 16% dividend yield that does look pretty consistently so far, you can see now why I'm not really concerned if this ETF does move up like crazy in the short term, because even if it trades sideways and pays you 16% per year, I don't think any one of us are complaining. Now just to go through some basic math and just to share with you how easy in theory it'd be to live off of an ETF like this one that pays upwards of 16% yield per year in dividends. If someone, for example, had a $3,000 a month budget, let's say, that they were trying to get to a point to where their dividends covered everything. If SVOL is paying around 30 cents per share per month in dividends, more or less, let's just say. If an investor wanted to get to a point to where their dividend income from SVOL was to the point to where it was completely covering all their living expenses and more, if they had a $3,000 a month or so budget. An investor would only need to invest around $226,000 into SVOL in order for the dividend, in theory at least, to cover everything. Now, I am obviously by no means saying that an investor should go all in on something like SVOL or anything high yield for that matter, just to get their dividend income up to a point to where they can cover their bills and then some. But I'm just making the point that if an investor out there does want to build out a portfolio that is paying us a significant amount of dividend income on a monthly basis and wants an ETF with at least so far a rock solid strategy and decent performance so far, SVOL is definitely one to look into. So there we have it. Those were some of my all-time favorite dividend-paying ETFs that I've sort of learned about and invested into over the years at this point. Like I said, there's certain names within the group that we went over that I wish I would have invested into a lot heavier earlier on, but what can you do? We're at the point that we're at now. And at least I hope that I could have sparked your interest into some of these high quality exchange traded funds. But now lastly, I want to hear from you guys down below. Out of every single dividend paying ETF that we went through in this video, all of my favorites, which is your specific favorite? Drop the ticker symbol in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.